Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week at everything you need to know in 90 seconds at 9 o'clock, with news of a very sharp fall in investor interest-only lending in Australia. But first, in the US, the precursor ADP employment report has come in right where markets were expecting. It is a good rise and broadly based, powered by mid-sized firms and services. Only construction and IT services showed any declines in employment levels. This probably means Saturday's non-farm payrolls report will show payrolls expanded by 200,000 or more. That is not spectacular, but the average over the past year is 167,000. The Bank of Canada has held its official interest rate unchanged at 1%, but it did say it's seeing signs of higher prices in the country. In Europe, the EU has named and shamed 17 countries on a new tax haven blacklist. That bloc's effort to crack down on tax avoidance has come under fire, however, with no EU member states listed on the list. The list includes Samoa, the UAE and South Korea, but it doesn't include Luxembourg, Malta, the Netherlands or Ireland, all countries with far larger tax haven issues. German factory orders rose yet again in October, and data out overnight. It was the third straight month of strong growth, and prior month data was revised higher as well. Yesterday's third quarter GDP release in Australia shows their economy grew slower than forecast as household spending rose at its weakest pace since the 2008 financial crisis. So despite the RBA's view earlier in the week that interest rate rises may be near, it looks more likely they will keep interest rates on hold for longer. And staying in Australia, their crackdown on risky investor lending has resulted in the share of interest-only loans plunging by nearly half in just 3 months. APRA data shows that interest-only lending dived 45% during the September quarter. Interest-only loans made up 30% of new loans in the June quarter, but that share had plunged to an historic low of just 17% in the latest data. In New York, the US Treasury 10-year yield is now at 2.32%. The price of crude oil is sharply lower today, down $1.50, now just over $56 a barrel, while the Brent benchmark is down to $61.50 a barrel. Significant rises in petrol stocks worldwide are behind the drop. But further out, analysts are raising their forecast for 2018 crude oil prices after the OPEC and Russia output restraint deal was extended. But the irony is those crude price estimates are actually lower than today's prices. And reinforcing the theme of lower commodity prices, copper dropped more than 3% yesterday in the Shanghai market. China's growth concerns are behind the shift lower. The price of gold is unchanged at its new lower level of $1,263 an ounce. The Kiwi dollar is also unchanged, we're at 68.8 US cents. While the cross rates were higher at 90.9 Aussie cents following yesterday's Aussie GDP undershoot. And against the euro, we're at 58.3 euro cents. That puts the TWI little changed at 71.8. But Bitcoin is sharply higher yet again today, up $1,000 in the past 24 hours to $12,720. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.